Hey everyone, this is Connor Slayton from Features Analytica. We're going to be finishing our $500 to $10,000 series today, and we're using the Polarity automated trading interface to do it. This episode's kind of an emotional roller coaster. Be warned, I make a ton of mistakes and I'm pretty off my game, but it should be an interesting watch nonetheless. Anyway, to dive right into trading here, we've got a massive downtrend that has formed in the beginning of the day, with a super high correlation between delta and price currently. This is an easy decision to use one of the most basic modes of the Polarity ATI, which is to click Arm Both and fully enable the strategy in trend mode. When this is enabled, the strategy is fully armed and looking for 3 layers of order flow imbalances and will enter in the direction of those imbalances automatically. That is, after it has completed its adversary detection algorithm. This secondary algorithm was added to the Polarity ATI a few weeks ago and further strengthens the strategy to reduce the workload placed on the trader when not used in full auto mode with Auto Arm. It was right here that we got filled into our first trade of the day, with Polarity finding a triple stacked sell imbalance, solidifying the completion of another rebound leg of this downward move, along with pushing us into a short position. We get our first exit of the day, which is a pretty predictable trade. Shortly after filling and observing that delta and price are still holding correlation like before, we repeat the same simple step as before and clicked Arm Both to enable the strategy in both directions. Notably, we haven't switched to regression as the context of the market is identical to what it was in our first trade. Also, to current Polarity owners, we've pushed a free guidebook update for even more in-depth education on not only regression and trend mode, but general use of the strategy's more advanced use cases. And of course, if you end up getting Polarity, you'll receive that updated version as well. In order to receive updates, you have to allow us to send you emails, which can be done by subscribing to the newsletter on our website. If we're not allowed to send you these email updates, so you won't be receiving them. But if you didn't get an inbox notification today, just shoot us an email with your order information and we'll send you the updated guidebook right away. Hopping back into the trading day, you'll see that we got filled for a short position there. This trade takes a really long time to play out, likely because from 9:30 a.m. Pacific to 12 o'clock Pacific, the market really does lose volume. This strategy utilizes an edge that takes market microstructure to achieve returns. So that being said, it works best in times where the tape is moving quicker rather than slower, meaning this time from 9:30 to 12 is the strategy's weak spot. But this only really applies when there isn't a fundamental event which elevates volume, so don't take this as a mechanical rule to not trade in between those times. But it's definitely a good idea to contextualize what you're doing with the current speed of the tape during trading. For example, the strategy does very well at riding the wave when the Federal Reserve has a meeting. I recommend taking a look at the past returns of stacked imbalances when the Fed changes interest rates. Just make sure you're trading with a tight stop if you decide to take that strategy live. From the time we got into that trade until the time we closed, the footage has been sped up 16 times just to give you a better idea of what's going on. Alright, so after price sluggishly chopped back and forth for 20 minutes, we ended up getting filled. Take a look at delta at this point. Absolute poker face, telling us nothing. So here we're going to try and trade the last hour of the day as volume will probably pick back up around that time. Normally I probably would have called it quits here with $1,000, but I really am trying to get to that 10K mark and finish this series. Alright, it has been about 2 hours since we last checked in. We observed another downward thrust that's actually been slowly dying out here. I want you guys to notice that delta has continued to be just as negative throughout this entire price action segment. However, downward price action is quickly losing steam. At 11:11, that triple stacked imbalance would have almost gotten us a profitable fill. It capped right out at around 13-14 ticks from the trade entry, and that was right after a very strong amount of sell pressure. This time, with a lot more weaker sellers that are a lot more exhausted, we are going to arm long and try and recreate what happened earlier, but this time get a profitable fill. If price continues to move down very slowly and Delta starts to change what it's doing right now, we're going to disarm the strategy and try and get some more information before making an action. I would consider this move more of an advanced move for users who have a stronger fundamental understanding of order flow, and for users who may not understand it as well to stick to the more basic arm both strategy until they become more experienced. And we end up getting a long fill pretty quickly there. This is more of a riskier trade, but we're being a little bit greedy today, so we'll see how this plays out for us throughout the rest of the trading session. We're trying to quote-unquote hedge this decision by arming in both directions in trend while we're in this trade. This queues up another trade for after for an immediate entry if there is a stacked imbalance. The way things are going right now, the next price move should be explosive. So we hope to take advantage of that if this trade is not profitable, or if it is and we want to take advantage of an upward move. I guess I'm saying that was more of an against the odds trade, but it was still higher than a 50% chance of that trade coming through just to the inherent edge stacked imbalances provides, but definitely less than our regular trading style. And we're not necessarily being risky anymore by being an arm both while in trend mode. The conditions are correct. And this trade is a good example of how not being strong mentally can affect not just the trades that you take while in a moment of weakness, but future trades if you're not careful. It's important to not overanalyze potential changes you could make to your strategy based on small observations in a tiny time series. This can seriously detriment your trading in the future, even if you don't officially make that change. All your brain has to do to start considering that as a factor in a potential trade is for you to watch that condition successfully work if you had used it. You'll see here that in this trade, which had a perfect setup, I end up losing it. Deep down, no matter how long you trade, watching yourself making an incorrect or risky move and having it work out, and then watching yourself make a correct move and lose a trade does still have an effect on your psyche. And it's very important to stay grounded and avoid this by circling back to the foundations of why your strategy works. You can see here that I've marked out absorption levels with the Y-axis range tool that comes standard with NinjaTrader. I'm marking previous highs that left a zero in the relevant corner of a footprint bar, and going to use those, as I've stated in the past, are relevant to the strategy. Like I said earlier, this is a very high pressure trading session. I've already put a large burden on myself with an aspirational profit target and a stressful amount of leverage. This causes me to second guess myself here after we lost that trade and actually arm long again like we did when we won that trade after we get stopped out. Whereas the correct move would have actually just been to arm both. Now I will say, even if we did the correct thing here and we did arm both, we still would have taken a loss here. But the issue is that we're off our game. Bottom line, we did not take the correct move, which was a decision based off of our emotions. It's difficult to get my point across and present this as an example of why you should follow your rules 100% of the time, as the outcome would have been the same either way, a loss. But it is still important to highlight my mistakes just as much, if not more, than my accuracy. Okay. You can see me get stomped out of this trade here, and I'm obviously pretty frustrated with myself and the system at this point. I felt like I was in some type of negative feedback loop type situation where each correction I made the situation worse. Now remember, you're able to observe this with no stake in the game and may consider this a little bit silly to make this decision. But it's really different when you're actually in that position, and I'm sure anyone who's been trading for over a month can understand that. Just know that it doesn't go away, you just have to come up with methods to cope with it and fight it. And here we almost really screw up again. We went armed short in trend mode. The correct move here is actually a regression both arm. Not because of entropy, but because of this micro chop that's forming at the 3992 to 3998 level, so close to that upper absorption band at 4000. We catch ourselves here and make the correct move, but it could have led to us ruining this entire session. We're already almost down to our break-even point from when we started the day, which is super demoralizing. But we're really dialed in now after we take a deep breath and center ourselves. I know I said the correct move was to arm both in regression, but really the best actual move was probably to stop trading and just start again tomorrow. This is an example of myself overtrading, and overtrading will destroy you in the long run. And contrary to popular belief, overtrading isn't just when you have a loss and are trying to make a gain on the day. It can really be for any reason, whether that's you've had an incredible first start of the day, you've won 100% of your trades, gotten 10 wins in a row, or you're just stuck around break even like I am here. Okay, so now we have another winning trade. But in the back of the head, we still have that emotion screaming at us that we can't get too comfortable, and we need to hyperanalyze everything and look for a better trading decision than we would normally do to avoid giving back our last gain. So for some reason, we switched to trend mode in both to try and avoid this hidden barrier that we're going to get into a regression trade that's going to stop us out with a big breakout. Now here is what I absolutely hate about this example. It reinforces bad habits even more because we win here. We fill this trade and we get that other win, bringing our total up to $1,600 of profit. I'm not even kidding, this is probably my worst trading day I've ever had in the past year. Not because of my actual monetary performance, but because of how emotional I was with my trades, because I set this stupid pressure on myself to try and perform, to overanalyze, to overcompensate for things that weren't even wrong. On the other side of the coin, I'm glad I got to show you this because it shows the human aspect of myself. It shows my mistakes when trading. It helps you guys relate to the strategy more. I think it'll teach you guys exactly how to deal with these emotions when you understand that I am fighting them as well. I'm sure you guys can understand what I'm talking about when I talk about this overanalyzation of market factors that you wouldn't even consider before. You can see me marking out bars that have high delta correlation. Now that price is so far from the absorption levels, we actually should be just looking at delta. And even though we're chopping, trend both is correct here just because of entropy. And there is the fill. Maybe not a deserved fill, but one nonetheless. Although we've been making incorrect decisions, what's actually been saving us from consequential losses here is the adversary detection feature that was added very recently to the strategy. We now have an extra safety cushion in terms of the strategy automatically keeping us out of bad trades. Anyway, at this point, we are correctly armed. We're in arm both in trend mode. Delta is correlated with price, and we're far from the absorption levels we had marked before. As long as these factors stay the same, we are taking no action. Alright, we got a long fill there. Notice here that both of our potential exits, specifically the long fill at our take profit, is very close to the absorption level, meaning that the next time we're looking for trades, it must be in regression mode. If price then approaches the center line again, we can reevaluate and switch back to trend as long as delta and price are correlated. But for the time being, the selection of regression in arm both is key. You have to think a little bit ahead about where your trade is going to exit when determining what mode to be in if you're going to queue up another trade while you're already in one. Basically, the principle behind the aggressive action is you don't want to trade into an absorption level. Alright, so there was our take profit getting filled. As you can see, it was the fill at the top, which was closer to the yellow absorption level, meaning we're fine with our current selection of regression. Okay, so here we are so close to our goal. You're gonna see me adjust my take profit and stop loss to be tighter on both sides, so that we're just above the 10K mark if we get a profitable fill here. And of course, we're doing the same thing for our take profit, so we are minimizing the risk for our gain. No need to keep secrets. This is the last trade of the series, and you can guess what the outcome was. I want to thank you guys so much for accompanying me on this journey. It's been an incredible experience to relive what it's like to grow a small account again, and I've learned a lot about myself as a trader and the experience that you guys are having when starting as trading, so I can help you guys further. Now, as I promised, by the time this is uploaded, I will have completed the donation for $10,000 to World Vision. You can verify this being an actual donation made on the right-hand side of your screen in the fundraiser column, which is now at $10,000 plus the $55 you guys generously contributed to them without me even asking you guys. So if you were one of the people who contributed, I want to personally say thank you. Now, to address the fact that it says that the organizer is me, you may be concerned that this money is passing through my hands and that it's not a real donation. I'm the organizer, but I can only select a vetted nonprofit organization. I never see or have the ability to tamper with any of the funds passing through this fundraiser. You can read about how this program works in the link in the description. Also, here's some information on upcoming free Polarity updates and what's going on currently with Futures Analytica. We have 2 updates in the pipeline right now. One of them is nearing completion, and that one will be a quality of life update, where you will be able to use ARM, disarm, and ARM both, as well as a regression mode switch by using keybinds that you can configure on your keyboard. Whereas when you press that key, it will toggle in between those 2 things. We also have another update in the pipeline, which will come early January, which will add the functionality to trade based off of other contracts, meaning you're able to trade the micro contract of NQ and ES using the data from ES or the big contract of NQ. This will allow you to not have to worry about the data discrepancy in between the micro contract and the mini contract if you're on a small account. This should help you with risk management so you won't be pressured to move up too early. Also, we're running a 15% off Christmas sale site-wide, so use code JOLLY15 to get 15% off your entire order. Regarding Futures Analytica, I am personally going to be out of town from the 15th until the 23rd. It's unlikely I'll be trading during this time, as it is an intentional period of rest. However, I've spent the past week creating videos that will continue to be released while I'm gone, so you won't have to worry about a lack of content. Futures Analytica will continue to run with full 7-day support by our excellent support specialists, so you won't have to worry about asking a question and not getting a response. Anyway, that's all I have for you guys today. I hope you're all having a wonderful holiday season with your families, and I wish you all a Merry Christmas.